At Ines Group Berhad, we have built a strong foundation as a Malaysia-based edible bird's nest company. Our subsidiaries Mingfeng and Dynamic Transforms are among the top 10 Malaysian companies exporting raw, cleaned edible bird's nests to China, reinforcing our position as one of the leading market players in Malaysia's edible bird's nest industry. Looking ahead, we are focused on long-term growth and value creation. Our plans include manufacturing bottled bird's nest and other herbal beverages in-house, giving us greater control over quality, product development, and formulation flexibility.
In Malaysia, over the past 4 decades, Hock Soon Poultry Farm has evolved from a humble family business into a leading force in modern agriculture. Today, Hock Soon produces over 1.5 million eggs daily, with operations spanning more than 20 hectares. Every day, freshly laid eggs are transported via conveyor belts into our facility, where they pass through multiple inspection stations. Hock Soon's in-house brand, Q+, has been serving the nation for over a decade. The range includes omega, selenium, vitamin E-enriched eggs, and jumbo-sized eggs. Hock Soon Poultry Farm, nurturing quality from farm to table.
What would happen? Machines run. Operation stopped. Tables are dirty. Business halted. Store closed. Staff gone. What if you had Manforce Group? With Manforce Group, every step is handled. Every risk is managed. Every regulation met, from permits to paychecks, ensuring legal, fair, and quota-compliant start. Partner with Manforce Group right from the start. Powered by Manforce Group Berhad.
Where creativity meets strategy, and where brands are built on innovation and insight. We provide a complete 360-degree marketing and sales solution, creating real-world exposure through business events, awards, and networking platforms. We then strengthen online presence through digital content, media exposure, and performance marketing. To reinforce awareness, we extend the message offline through billboards, banners, and digital out-of-home media.
KleverStock is a content-driven financial media and investor insights platform. We integrate live stream coverage, educational content, market data visualization, and AI-powered tools to support investor understanding and engagement. In the past year, we achieved significant momentum across our operations and market visibility. We delivered nearly 99% of all IPO and listing day live stream coverage, featuring executive interviews, ceremony broadcasting, and real-time market updates. We collaborated with major corporates including Foodie, Aquawalk, and many others. We also expanded partnerships with investor relations firms, trading platforms, and marketing agencies. KleverStock is now ISO certified, and our official media accreditation has been renewed, enhancing governance, access, and professional credibility. Our content performance continues to grow rapidly. We achieved over 10 million impressions across social platforms, 1.2 million unique visitors in 2025, and more than 630,000 live stream views driven by our IPO and market coverage. These results reinforce our growing influence and visibility across the financial community. We advanced our technology with Phase 2 of our AI engine, enabling smarter sentiment tracking, automated summaries, and improved market screening. Our priorities for 2025 include strengthening strategic partnerships, enhancing our IPO and corporate livestream capabilities, expanding content production, and accelerating AI-powered investor tools. We remain focused on innovation, consistency, and delivering market-relevant insights. KleverStock remains committed to growth, technology advancement, and delivering meaningful impact to our clients, partners, and audiences.
In a world powered by data, Electricity is not optional, it is foundational. Every transaction, every connection, every system depends on it. Electricity sustains industries, enables digital ecosystems, and underpins modern life. Economic growth depends on stable infrastructure. Digital expansion depends on reliable power. EI power strengthens the systems that sustain both. We engineer certainty in environments where certainty is required. EI Power Berhad, powering tomorrow.
HSS Holdings Berhad, where we transform the finest bakery products into accessible delights for everyone. We combine premium quality with affordability, driving product innovation and leveraging our extensive distribution network to reach more markets, mini market, supermarket, and hypermarket. From HSS to LHMC and Kasaga, our commitment to quality, innovation, and customer satisfaction drives us forward. Join us in bringing incredible bakery products to the world. HSS, your trusted partner in bakery excellence.
Go!
Rest and go.
SRO. SRO, so you have a range clear launch.
And CDI.
Half of the case, processing and launch.
Good afternoon, investors. You are now on KleverStock with me, Madhavi, and I'll be serving you the midday roundup with the latest market updates from this morning up until now. Opening today's market wrap with a look at the domestic front, the FBM-KSCI rebounded on Tuesday morning following the previous session's profit-taking driven by sustained investor optimism surrounding the nation's strong economic growth and solid fundamentals in the banking sector. At the opening bell, the benchmark index climbed 3.33 points to 2,725.62, recovering a portion of the 9-point decline recorded yesterday as market participants took profits from the recent rally in financial heavyweights. According to APAC Securities, while selling pressure emerged in the prior trading session, investor interest successfully rotated from banking stocks into technology, energy, and small-cap counters with positive overall market breadth. The research house noted that this shift points to a broader expansion of the GDP-led rally, highlighting that the strong 5.8% economic growth figure continues to underpin the domestic narrative. Heavyweight banking stocks found steady footing early this session. Malayan Banking Berhad added 4 cents to 11 ringgit 6 cents. RHB Bank Berhad rose 2 cents to 8 ringgit 29 cents. And Hong Leong Bank Berhad gained 6 cents to 22 ringgit 30 cents. Conversely, CIMB Group Holdings Berhad dipped 2 cents to 7 ringgit 73 cents. APAC Securities observed that the technology counters could prolong their recovery provided regional market sentiment stabilizes, though buying conviction might remain modest until AI-linked selling pressures in Seoul subside. The firm also highlighted that energy counters are well positioned for continued support due to firm global crude prices. Energy names could remain supported with Brent near $89 and the conflict unresolved keeping upstream producers and services counters in focus, APAC Securities stated in this market outlook. Addressing the broader market dynamics, the research house added banking heavyweights may see further near-term profit-taking after leading the GDP rally, though dips should find institutional support given the growth backdrop. Plantation is worth watching after CPO futures fell to 4,643 a ton, while utilities and rate-sensitive counters could stay soft as elevated oil keeps inflation concerns alive. In active trading, MX edged up 0.5 cent to 1.5 cent, while GIIB gained 2 cents to reach 53.5 cent. Highlights on the main market included Stratus Global, which made a stellar regarding trading debut by surging 1.12 ringgit to 1 ringgit 92 cent following a successful 285 million ringgit initial public offering intended to fund its business expansion in Penang and abroad. Moving on to our local currency and foreign exchange. The Malaysian ringgit maintained a flat opening against the US dollar while making notable gains against several major foreign currencies on Tuesday morning, bolstered by exceptionally strong domestic trade performance that helped buffer external market turbulence. According to recent data released by the Department of Statistics Malaysia, the nation's external trade expanded rapidly, driven by a 45.4% jump in exports to 177.9 billion ringgit and a 43.9% increase in imports to 163 billion ringgit. Consequently, Malaysia's monthly trade surplus shot up by 64.9% to reach 14.9 billion ringgit. The local unit was quoted at 4.0895 or 4.0950 against the greenback at 8 a.m. Matching Monday's closing pricing, the greenback found modest support across global forex markets due to rising geopolitical tensions in the Middle East. Stephen Innes, managing partner and SPI Asset Management, pointed out that the international crude prices briefly climbed following sharp warnings from U.S. President Donald Trump targeting Iran over the deaths of American personnel, alongside escalated naval threats by Houthi forces near the Red Sea. During morning trading, benchmark Brent crude fell slightly by 0.12% to $82.38 per barrel. Various West Texas Dax Intermediate dipped 0.45% to $88.82 per barrel. Dr. Muhammad Afzal Nizam Abdul Rashid, chief economist and Bank of Malaysia Berhad, noted that caution among investors keeps the US dollar index elevated at 100.996 points. The situation in the Middle East continues to be focused as Yemen's Iran-aligned Houthis said they would impose a naval blockade on Saudi Arabia for vessels that pass the Bab el-Mandeb Strait. Dr. Muhammad Afzal Nizam remarked, anticipating that the local note will likely fluctuate within a tight band of 4.09 to 4.10 against the greenback. Despite the flat stance against the US dollar, the ringgit advanced across major currency pairs. It strengthened against the British pound to 5.4926 or 5.5000 for 5.5049 or 5.5123 at the previous close. Rose against the euro to 4.6686 or 4.6749 from 4.6743 or 4.6806 and appreciated versus the Japanese yen to 2.5169 or 2.5205 from 2.5177 or 2.5212. Regional market performance was mixed. The ringgit edged up against the Singapore dollar to 3.1675 or 3.1722 and climbed against the Thai baht to 12.1512 or 12.1734. However, it held firm and unchanged against both Indonesian rupiah at 227.8 or 228.2 and the Philippine peso at 6.63 or 6.64. Now for some economic news. Fiscal savings derived from the targeted RON 95 petrol subsidy mechanism are being redirected back into targeted public assistance rather than retained strictly as a budget surplus, according to the Ministry of Finance. In a written reply published on the Parliament website, the ministry clarified that the funds generated from subsidy rationalization have allowed the government to enhance targeted social protection programs for the majority for the populations. The funds have also been deployed to protect national food security and support agriculture producers through specific initiatives, such as the ploughing incentive for paddy farmers and the paddy harvesting incentive. Addressing measures aimed at supporting small and medium-sized enterprises, the ministry highlighted flexibility in the implementation timeline for Phase 4 of the National E-Invoicing Framework, extending grace periods through the end of 2027 alongside the interim import duty exemption for re-imported Malaysian goods running until December 2026. The ministry stated during the transition period up to December 31, 2027, no penalties will be imposed and taxpayers are allowed to issue consolidated e-invoice monthly. The response was issued in reply to Senator Dato' Ko Nai Kwong, who inquired whether savings from the April 2026 targeted RON 95 petrol subsidy had been allocated toward the SME transition grant. The ministry detailed the phased rollout of the e-invoicing initiative, which began on August 1, 2024. The large corporations generating over 100 million ringgit in annual fees. Subsequent phases expanded coverage to business with annual sales between 25 million ringgit and 100 million ringgit in Phase 2, between 5 million ringgit and 25 million ringgit in Phase 3, and up to 5 million ringgit in Phase 4. Participation across the business community remains high, with more than 230,000 taxpayers adopting the framework and over 1.5 billion e-invoices issued to date. The ministry also added this reflects a strong level of acceptance among taxpayers in complying with and supporting this e-invoice initiative. We'll now take a short break, but don't go away. We will return shortly with corporate news and developments. Welcome back to the Media Roundup. Let's continue with some corporate updates. Factory automation firm Stratus Global Holdings Berhad made a spectacular debut on the main market, with its share price more than doubling during early morning trading following immense demand for its initial public offering. The Penang-based automated material handling specialist opened at RM1.96, representing a massive 145% premium over its IPO price of 80 cents per share. The counter climbed to a high of RM2.03 before settling at RM1.91 by 9:15 a.m. With over 5 million shares changing hands at that price level, the company's market capitalization reached 2.4 billion ringgit. The impressive trading performance stood out against the broader cooling sentiment in the global technology sector, following a blockbuster IPO process where the retail portion of the offering was oversubscribed by 129 times. Stratus Global, which primarily serves the semiconductor sector, successfully raised 285 million ringgit in new capital from the exercise. The listing did not involve any offer for sale of existing shares, signifying that current shareholders are retaining their entire stakes in the business. Management intends to deploy the fresh capital to expand its manufacturing and production footprint, fund research and development initiatives, drive and the international expansion, and boost its general working capital. The group was originally established in the United States in 1998 by Chief Executive Officer Ryo Narisawa, a 72-year-old Japanese executive. Following the listing, Narisawa holds a direct 3.1% stake alongside an indirect 41.6% interest through his private investment entity, G-Yuan Holdings Sdn Bhd. UOB Kay Hian Sdn Bhd acted as the principal advisor, sole underwriter, and placement agent for the listing exercise. Up next, we have a commodities update. Crude oil benchmark prices softened on Tuesday, and as energy markets weighed potential diplomatic mediation between the United States and Iran against the ongoing military strikes and a fresh naval blockade threat targeting Saudi Arabia by Yemen's Houthi movement. Brent crude futures dropped 35 cents or 0.4% to trade at $88.87 per barrel, while U.S. West Texas Intermediate crude for September delivery held relatively steady at $82.47 per barrel. Both oil benchmarks pulled back slightly from the more than 1 month highs reached during the previous trading session. Supply concerns briefly flat after the Iran-backed Houthi movement in Yemen declared a naval blockade against Saudi Arabia, threatening to expand regional conflicts into critical shipping lanes beyond the Gulf. The threats of naval blockade of Saudi Arabia by the Houthis are significant because they raise the risk of disruption to another major oil exporter, said Tim Votra, chief market analyst at KCM Trade. However, reports of renewed diplomatic channels helped cap further price increases. A senior Iranian official confirmed that Tehran received a mediator proposal for a 10-day ceasefire designed to store at interim agreement signed on June 17th. The diplomatic overtures developed despite another night of strikes exchanged between U.S. forces and Iran's Revolutionary Guards across the region. Market analysts noted that while conflict risk remained elevated, short-term momentum has been halted by the potential for diplomatic progress. IG market analyst Tony Simcoe said oil has come a long way already and it certainly has the potential to go higher again. However, in the short term, the overnight talk of the de-escalation and peace talks appears to be capping the upside for the time being. Whether anything comes from those peace talks remains to be seen. Meanwhile, market participants are also monitoring inventory fundamentals in the United States, where preliminary poll results indicate a likely drawdown in domestic crude oil and gas line stockpiles alongside an increase in the distillate inventories. Finally, wrapping up, we have major corporate developments and the deals across Malaysia. Sunway Berhad said a consortium comprising its 30% owned joint venture has secured a land parcel at Bayshore Drive, Singapore for $2.13 billion after submitting the highest bid. Velasco Energy Berhad's indirect wholly owned subsidiary, Velasco Drilling Sdn Berhad, has mutually terminated a 4-year drilling contract worth over $90 million for the Naga 8 jack-up rig with PC Ketapang 2 Limited, PC North Madura 2 Limited, and Petronas North Ketapang Sdn Berhad. Awan Biru Technology Berhad said its subsidiary Awan Tech System Sdn Berhad has extended its cloud framework agreement with the Malaysian Administrative Modernization and Management Planning Unit and Google Cloud Malaysia Sdn Berhad for up to 12 months. ECM Libra Group Berhad's wholly owned subsidiary, Desaver Beachfront 2, Sdn Berhad, has accepted a 120 million ringgit term loan and 10 million ringgit revolving credit facilities from RHB Bank Berhad to part finance the development of a beachfront hotel and for working capital purposes. MUI Properties Berhad said its indirect 60% owned subsidiary West Synergy Sdn Berhad will dispose of an industrial land parcel in Bandar Spring Hill, Negeri Sembilan to Antmit, Malaysia, Sdn Berhad for 18.7 million ringgit cash. PRG Holdings Berhad said its indirect wholly owned subsidiary Premier Construction Sdn Berhad has filed a winding up petition against Premier D. Mutwara Sdn Berhad over alleged unpaid construction claims amounting to 64.2 million ringgit. Ramshall Group Berhad said its indirect wholly owned subsidiary Rams Fintech Sdn Berhad has entered into a memorandum of agreement with Bank Berhad to formalize their collaboration on the Payday Now Earned Badge Access program. Reservoir Link Energy Berhad said its wholly owned subsidiary Reservoir Link Sdn Berhad has obtained 10-year license from the Energy Commission to transport natural gas and import liquefied natural gas under Malaysia's third-party access framework. And that's a wrap for Midday Roundup with me, Madhavi on KleverStock. Thank you for tuning us, investors. Stay tuned for our upcoming live stream programs.